So let's get started. Wait a while, yeah. Adding this. So are you all looking at the full screen now for the PPT? Give me sometimes there is some technical. Alright. So let me check everything is okay. Then all right. Okay, so let's get started. So good evening to everyone. My name is Ming. So I will make some introduction about myself. I am full-time trader for the past 7 years, and I trade and invest in stocks markets, cryptocurrency, and I do trade forex too. I also do automated trading strategies like using grid trading strategies in the stock markets and cryptocurrency markets to get a pretty consistent profit regards every different types of trends. So now I'm in the financial education field, and I hope that I can share my experience with you all. So today I will talk about exploring short-term trading and long-term investing. We will discuss more about what is the pro and cons as a short-term traders or maybe long-term investors. So this is what I will be sharing with you all today. So I think this nothing much, like this not that nothing special. So this mainly about the psychologies about how we do profits in this stock market by doing short-term trading or long-term investing. How can we choose between all this? So we need to understand that. Okay. So sorry. I think everyone is in already, right? Wait a while. There's some. Everyone can hear me, right? Because someone said they cannot hear me. Can hear well. All right. So I think there's some technical errors. Never mind. Let us continue. Okay. So today we will discuss about the mindset of the short-term tradings and long-term trading. Long-term usually doesn't call it as trading. We call it as maybe swing trading or investing. So today I will be discussing about this both short-term and long-term. So how can we choose? How can we decide the trading plan or investing plan between these two? So first of all, this is a very basic stuff because most of the newbies, I must say, they don't have an exact plan. Like if you want to do short terms, sometimes they will start in certain positions and then it becomes long term. And then sometimes they want to do a long term trade, but they can't hold their positions. So when there is a fluctuations, they will very fast to sell their stocks if there is any big news or fluctuations, because they didn't have any solid plans. So here we will discuss about all these advantages and disadvantages and how can we tackle them. Okay. So let us do some Q&A about trade decisions. So let me give a case scenario. So when you have 1 million, so there's a chance between 80% chance to gain 10% returns, or you will choose 20% chance to win 500%, or 80% chance to lose everything. So if you got 1 million, so which one would you choose? The first one, the 80% chance to gain 10%, or the latter one? So most of the people, I think you all will choose the first one, right? Because even though the second one have 20% chance to win 500%, and there's a 80%, but there is a 80% chance to lose everything. So, right, I think everyone shall agree with me about this. If you got 1 million, I think most of the rational people, or most of the common people, I mean, will choose the first one, which is a relative stable one, 80% chance to gain the 10%. However, if your capital is not that big, if you only got $500, who will choose the first one? Maybe you all can write down in the chat box. So if you only got $500, which one will you choose? The first one, 80% chance to gain 10%, or 20% chance to win 500%, and 80% chance to lose everything. I think for the most of the cases, most of the people with the less capitals will choose the latter one. So the latter one, why? Because the 10% of the 500 is only $50, which doesn't make any change in your life, right? So we trade, we hope to get rich. We invest, we also hope to get richer. So if this amount of money can't change your life, we tend to go to the very risky trades. So just like casino, if you keep trade $500 and expect a higher returns, but your drawdown is maybe lose all or lose most of the capitals, eventually you won't have a good trade results or good investing results. Because when you have the small capitals, you tend to choose a risky trade. You tend to pick very hot stocks, you tend to chase high, or you tend to chase those fancy stocks. So you end up going all in with this less amount of capitals in the stocks. So here I must say that capitals do matters. Capitals will decide the your results in trading or investing. Huawei, I can't deny that there's also some people with the very big gambling mindsets. They will choose this. They will use a huge amount of capitals, like maybe 1 million. They also will choose the latter decisions. They also will go all in the relative riskier trades. So we have to think how to allocate our capital. This is a very important lessons for every newbies, because before we enter the trades, we must have a solid trading plans. So if we don't have the solid trading plans, we just like going into the markets, driving the car without brakes. Then we will crash anytime. So everything is very important before we open the trades, because once you open the trades, you can't change anything already. Because after you open the trades, it's either you win or either you lose. It's that easy. So the homework you must do is before you open the trades, you have to know when to enter, when to cut loss, when to add positions, and you have to think all about it before you trade or invest in the stocks. Many people, when they enter the stocks, then the stock price suddenly crash or suddenly make a huge drops. They don't know what to do, because before they enter the trades, they don't have a solid plan. So it makes them like emotional unstable. When you panic in the stock markets, you tend to do many stupid mistakes like buy high, sell low, and then you keep repeat and keep cut here, buy there, and repeat until you broke. So this is a very common scenario in the stock markets. So we have to like take it as a lessons, and then we have to like do a case studies, and then we have to think how can we tackle it. So trading actually is not a very easy thing, and it's actually the hardest way to earn easiest money. Many people think like trading is very easy. In fact, it's not, because there's less people like really success in the trading. So here I just want to share about capital do matters, because capital will decide your mentals towards how you like get through in this stock market cycle. So here today I will discuss like one of it is long-term investing. So what do long-term investors do? So investors and companies grow together. It means when these investors looks good at this company, like the futures, like they forecast about their futures can go up very high. So the investor will buy it at low and then write it together with the companies. As long as the companies is making profits, so it will reflect in the stock price. So here somebody says some companies did do a very good performance, but the share price cannot go up. This maybe the companies have a trait of like speculations. Like for examples, I give examples like maybe SMCI, one of the stocks that promise many things, but the price will end up like will end up very badly. And all this we have to look at the past trends. If the companies delivers a good stock performance, is the share price keep it up with the performance. So usually all these companies is big cap companies. So I will advise you all that you all choose a big cap company to invest instead of those mid cap or smaller cap companies for stable growth. So for long-term investing, investors have to grow with the company together over time. So you have to do a good due diligence about the markets, how the company grows and how the companies like fulfill their targets every year. So for short-term tradings, traders only focus on what? Trader only focus on price difference. I don't care the share price can goes up how much. I just want to make 10 cents out of this market. I just want to make 20 cents out of this market. So traders have to have a fixed, solid plan that he will only earn the amount they wanted to earn. Because many people like do short-term tradings, they tend to become very greedy. When they plan to like maybe earns like 5% of these stocks, but end up they want to earn more, then they hold like 5%, then the share price start shooting up, maybe 7%, 8%, and they still don't want to sell it. Until then, they sell it at low when it retraces a lot, or maybe retrace until they lose money, and then they will cut it at loss. So all these traders have to have the very strong mindset and a solid plans that they will only need to focus on earning the price difference of the stocks based on price actions like using technical analysis. So short-term trading, usually there's few types of short-term trading, which the common one will be the day trading and swing trading. There's also one called scalp trading. I would not recommend that because it needs strong skills to trade the very short term to do a very short term trades. So if you all want to go short term tradings, I recommend you do day trading or swing trading. Day trading is like we will sell it in this 1 or 2 days, and swing trading usually will take out from weeks to months. So for short-term tradings, usually the characteristic is like high frequency trades. Maybe 1 month you can do 5 to 10, or maybe some people can do up to 20 trades. And you can quickly capture the market fluctuations because markets will keep on fluctuates. So we just want to earn the fluctuations, like the price difference when it goes up, we just want to like earn those price difference, which got more chance. The entry point will be more and more chance to enter. However, many people have a wrong concepts about when they enter. The more they enter the markets, the more they earn. In fact, the more you enter the markets, maybe the more you lose in the markets. Yeah. So it's not that easy if you do short-term trading. And for the strength of the short-term trading, you usually get a very quick profit. And if your capital is very big, usually like maybe 1%, you can make a very good living out of this already. However, if you keep on do short-term trades, sometimes you will tend to have the casino mindset. Like you are always in the casino mindset, always in the casino. So if you do trades, keep on doing trades, like you don't want to leave the markets, you always stare at the markets, you tend to sometimes tend to make a very impulsive trades and do a wrong decisions because your emotions, you're always in the markets. This from my experience, because last time I also do a lot of short-term tradings. However, it doesn't end up good, and it also affects my life. So now I just do mid to long-term trading. Okay, and if you do short-term tradings, it enables you got fast capital turnover. So you can buy this and buy that, buy this, sell this, and then you can buy that, sell that. When the trend, you can follow the trends all around. But it really needs a lot of experience, I would say. And there is no overnight risk. Because when you trade, you maybe close the position very fast. You won't take overnight. And maybe if you take overnight trade, sometimes like Donald Trump will simply talk bad about the markets and the market can suddenly crash. Then if you do a short-term trade, you won't face all these problems. But in the end, it still depends on your capitals and your trading plans on how you want to execute in the market, want to achieve in the markets. It doesn't mean that short-term trade is not good, but I would say that it requires experience. It needs skills and experience to be success in short-term trading. So the weakness will be high trading costs because you keep in buy out. There is high trading cost fee, and then high psychological pressure because you keep stick to the fluctuations of the markets. Sometimes if you look back, if you look at the higher time frame, the fluctuations actually doesn't matter. But when we look too close to the markets, the fluctuations will affect your psychology, and then in the end you do make a lot of mistakes. Then it requires high technical requirements. High technical requirements, like as I said, you need a lot of skills and experience to be able to consistently like profit in the markets. To be honest, I use a lot of strategies. I can't focus only on short-term trading because I only use less capitals in short-term trading. If you use almost all your capitals in the short-term trading and you didn't do long-term investing and you didn't diversify your portfolio to others like relative stables, financial products, if you only focus on short-term tradings, you end up very fragile, and then you do a lot of stupid mistakes because you're too focused on the markets. Today, the Donald Trump say this, the market crash, you sell, and tomorrow the market rebounds, then you buy, and then you keep on repeat all this stuff because you're too focused on this short-term stuff. So, however, it depends on people, because if you can manage all this and then produce good results, then goes ahead. But I would say, based on the statistics, it's not that easy to do short-term trading. All right. Okay. So some studies about high-frequency trading. If you keep on trades in the markets, the research shows that 80 to 90% intraday traders incur loss. So, and then there's also a study of Brazilian intraday traders found that only 1% were profitable after 5 years of active trading. I'm not sure about how many people like did do short-term tradings. If you all do short-term tradings, you will know what I say, is it true or not, right? I think many people wanted to become a short-term traders. However, this is not that easy. I personally started with mid to long-term investing, and I actually earned a fortune, made a fortune in the stock market. However, I started to lose a lot when I become a short-term trader, because I think I can buy high, sell low. I can buy low, sell high. Then I will keep on repeats. I can go around, tackle all these hot trends, right? Then I will become very rich. I keep on enter the markets. I think the more I enter the markets, the more I win. In fact, it's not, because in probability wise, trading is about probability, right? If it's about probability, for me, it's gambling. Yeah, gambling sounds like a bad word, but be cool. For me, gambling, everything in our life is about gambling. You make a decision when there is not 100% certainty. You are gambling about certain results, right? So we want to gamble on something that has high probability. So we have to have a good mindset that if we want to gamble, we need to become a professional gambler. So how can we become a professional gambler? I will share with you all later one of the traits, like one of the things that professional gamblers do when they do trading. All right. So yeah, Richard Chi, yes, you are right. Yeah, if you all do short-term trades, you all will experience and know what I'm talking just now. It's not that easy. And then you look back in your portfolio, if you don't trade, you just keep on buying. Buy when there's a stock price discount, especially the good stocks, the good quality stocks, not the bad stocks. Then if you look back, you eventually earn. Maybe the percentage is not that good, but it's better than you lose the capitals, because once you lose capitals, you tend to like risk more. Like just now I've shared in my the slides. If you don't have much capitals, you will tend to like risk more. You will tend to go for the like margin. You tend to like go for the like options. You don't have a proper mindset already. Your emotion is unstable. Your psychology is not unstable, and then this the traits that will determine that you will lose. You'll definitely lose in the markets. I just be honest with you all. So you can explore this short-term trading. However, I recommend you until you are consistent, you all need to only use small amount of money to try to flip your capitals or try to compound and grow your capital. Because once you start with the big capital of yours, it will affect a lot. And then if you can really like grow a small amount of capitals to a big capitals over the time, that means your strategy is work. So you can't be so impatient to directly use big capitals. If you want to go big capitals, I will just recommend to go for the long-term investing first. So because short-term trading really requires all these like skills, mindset, experience, and then you have to take maybe a long time, a lot of samples to prove that your strategy is works or not. All right. So this all speaks based on my experience. So I'm here to share my experience, and I hope you all can learn something from here. And let's talk about the long-term investing. Long-term investing, we can say long-term trading. For me, the very long is like maybe more than half a year, can be 1 to 2 years, or maybe up to 5 years. So long-term investing requires you to hold positions over extended periods from several months to years, and you're capturing a major trend profits. Like I said, for the past 10 years, I think to 30 years, I think the US market do a very good job. So if you keep on buying those ETF, SPX 500s or Nasdaq, eventually you earn. However, if you keep on trade up and down, you lose the money. It's just as easy as that. As easy as ABC, because what you need to do is invest in the top 1% quality stocks, and then those ETF already help you to choose the best one, right? You need to choose a monopoly quality products like maybe Visa, MasterCards, all those like Microsoft. You can see the charts for long-term charts, it always goes up because it's a monopoly business. So you have to have it's just that easy. Sometimes you don't really need to do extra homeworks about this quality, these fundamentals of the stocks. You just go for this long-term stock, this top 1% stocks. But talks is easy. When we look back, we always think that I will do long-term trading. However, most of the people, they can't even hold to their positions. Like if you want to earn 20%, for me that one is called swing trading. So for long-term investing, you need to have the vision and belief about this will go up all the time, right? Just focus on the top 1% big cap stocks with those companies have a good performance track records. The characteristic of the long-term trading actually is like lower trading frequency. You don't always buy the markets, and you are focused on the fundamental analysis. Like I said, you just focus on the top 1% company, especially with those have economy moods. Because they are irreplaceable. Just focus on like SPX 500 ETF or Nasdaq or Dow Jones. For me, I will recommend SPX 500 and also Nasdaq. Then there's a common strategies about long-term investing, like trend following strategies. One of it is dollar cost averaging. I think dollar cost averaging is pretty normal, and in fact, dollar cost averaging has the highest win rate and is the most easiest way to beat the market in the long run. Sometimes you don't have to learn too many technical analysis. You just have to increase your active income, and then you keep on buying those like top 1% quality stocks. Then your targets will be put to maybe 3 to 5 years. Eventually, while you're working, you get a active income, then you dollar cost it here in those quality stocks. Then for the long run, as they were doing good, because top 500 like SPX 500, they pick a top most good top quality 500 qualities stocks to invest. So eventually it will do great over the times. So just simple as that. You just buy, keep on buy, and then when the market crashes, maybe you add more. But you don't go all in. Always in long-term investing, you don't go all in. Alright. So for long-term investing, we also do like value investing. We study those PE and those a lot of fundamentals. Like we look at the cash flow, books order ratio, all this. However, for me, the easiest one, just pick the ETF, Nasdaq or SPX 500. And then for the single stocks, you all have to pick those have a strong economy mood. For me, many people like to choose Tesla, but personally, I don't like to choose all these. Like for me, it's unstable, the business, because it can be replaced by in futures. I'm not sure. This not means I'm looking bad as a Tesla, because everyone have their own opinions. I tend to go for those like very stable ones, Visa, MasterCard, and maybe Microsoft, Apple's, yeah, and yeah, ETF. And another ones, maybe long-term investing, we will need to don't put like different eggs in one basket. We have to allocate to buy other investment products like gold, like maybe bonds, and some dividends stocks like banks, those good bank stocks. For me, like Singapore's for good banks, maybe Singapore DBS. I think recently it will make a new high or something like that. Or Malaysia Maybank CIMB is also not bad. Yeah, so and REITs, maybe REITs, but it depends on your appetite. For dividends, I will go for like bank stocks. But for long terms, we don't go all in. We need to separate our funds, and we slowly buy batches by batches. Okay, all right. So for long-term trading, the pro and cons is the long-term trading, you don't always execute the trades. So you have lifetime pressure because you don't need to stare and monitor the markets all the time. You have better stable returns like with dividends, all those stuff. But your capital is tied up. You need a lot of capital to do. It doesn't mean that you need a lot of capitals. You need a consistent cash flow. Like if you are working, long-term investing is definitely your choice. Many people are working, but they wanted to go for trade. In the end, they lose all their monies by trading. Because as I said, trading is not as easy as ABC. However, many gurus out there, they show that it's very easy. If it's that easy, they would not come out to do a course and sell to you all. Right? Because every day they can earn like maybe 10,000, 20,000, 30,000 out from the markets already. Right? So it's not as fancy as what you see. Do short-term trading. In fact, it's the hardest way to earn easiest money. All this you have to go through yourself, and then you understand what I'm saying. Because if you do short-term trading, you are just gambling. Yeah, just gambling, and the probability of losing is very high compared to long-term investing. Because long-term investing, you just eliminate all these fluctuations, and then you just look at the long term. Like gold is keep on making new high. Although it can be stagnant for a few years, but because it's scarce assets, for the long run, it will definitely earn. Sometimes many people say, oh, the return is not that good. However, if you keep on trading, you'll lose capital. If you lose capital, it means that it's not an asset, it's a liability. But if you buy those good quality stocks, yes, sometimes it will depreciate a lot. However, in the long run, it goes up. Because when it drops, you didn't cut, you didn't trade, but you didn't cut loss. So it means that you just face some like fluctuations, unrealized loss. As long as that in the futures there's a potential it to goes up. Long-term investing is a asset. You have to treat it as an asset. You have to accumulate more stocks, shares as an asset. You have to look at it as it's your assets. But trading, however, sometimes it makes your shares become a liability because you already cut. Once you cut, you realize your loss. Yeah, is a liability. So all this you have to know before you enter the markets. What's your tolerance? How much you can lose, and what's your plan before you enter markets? Because as I said, once you enter the markets, everything is cannot change already, right? So the cons will be your capital is tied up, and there's a market volatility risk when there's a black swan event, like market suddenly like crash a lot, like COVID happens, and you miss a lot of opportunity costs because you always stay like you invest maybe in the oil sector, and then the AI sector keep on goes up, and then you're still stuck in those other sectors. So we try to buy those. I think for the past 10 years is technology. So now it's AI. So the future potential of this technology growing is very big. However, there will be a huge correction. This anytime, we don't know when, but we always need to have a good cash flow to catch all these trends. So lastly, how to develop a plan. So we need to define a good, clear goals. Is this investing or is this short-term trading? How much do we want to earn? And when it goes up a lot, do we need to realize the profits? And then what is the plan? And when it drops, are we prepared to add the positions or are we prepared to cut? So all this you have to answer by yourself. So once you have all this, you won't feel very panicked, and then you won't feel very stressful in the markets. If you feel very stressful in the market, it means that you put a lot of capitals in it and you risk a lot. So try to trim down the positions if you always feel too pressure and you are don't willing to cut loss if you do short-term trading. Then you select a strategies. Short-term trading may be based on technical analysis, and long-term trading is very easy. You just do a dollar cost averaging. And then you do capital management. How much, if you do trading, how much can you afford to lose? Because once you lose more than 10%, it's very hard to come back. Like I said, if you lose 10% of your capitals, you need to earn 11% from your remaining capitals. If it drops up to 50%, you need to earn 100% from your remaining capital. So if you drop more than 10%, you have to think about your risk capital management, position sizing, I would say. Next, you have to also think about how to do a risk control. I will talk about risk control in the next slide, so just bear with me. And then after all this, we'll have to keep on evaluate and optimize our trading or investing strategy. So one of the professional traders, they always do is risk control. So here, how many people are doing risk control when they do trades or maybe investing? So if you do trading, usually they will like do a risk reward, like how much we need to lose and what is the target we need to achieve. Then we will find the opportunity. So let's say when a trader they do a trade with a plan of 1 to 3 risk reward. It means when you lose 1%. Let's say 1 is 1%. And then when you win 3%. Alright. So if your winning rate is only 30%, it means out of 10, you lose 7. In 10 rounds of tradings, you lose you win 3 and you lose 7 times. So if every trade you plan to lose 1% and win 3%, then with only 30% winning rate out of 10 rounds of trading, you lose 7 rounds, right? Because your winning rate is only 30%. It means in 10 rounds, you lose 7 times. So if every time you lose 1%, it means you lose 7%. However, the remaining, you only win 3 out of 10 trading rounds, right? If you win 3, however, each time if you win 3, you win 3%. It means it's 9%. So the net will be 9% minus 7% equals to 2%. You still have 2% profits. It doesn't look great. However, this can keep you in sane mode. I would say, when you trade, you won't feel so stressed. For my trade, sometimes I only use 0.5% per trade, because 1 to 2% is actually very much already from the professional trader aspect. So you all have to think about this. This is a business. You want to go in for a long run. You cannot risk like 10% or 20% of your capitals. If your strategy is works, you can keep on grow with all this risk reward control. So risk reward is very important, and position sizing, how much you need to buy the share, how much you need to lose, and then you have to limit yourself. Not once you lose like maybe 1 to 2 times, 2 trades in the day, you have to leave the markets. Or not, you will be like forever in the casino mode. You will bet until you lose all your money. So all these short-term tradings, you have to think what shall you all do. All these trading plans, you have to find yourself what suits you the best, because everyone has a different personality, I would say. And for me, I would like to go mid to long-term strategies. Alright. So for long-term trading, all we can do is very easy. We don't go all in, and then we use time as our friends. Like for dollar cost averaging, this graph is about gold. It had dropped about 30% for the past from 2021 to 2023. However, if you keep on dollar cost, you don't look at the unrealized loss. You treat it as an asset. You keep on accumulate a lot of shares. Then every new high it makes now, the positions you bought in early is making money, right? It's just that easy. And then the longer the time it consolidates, the more share you accumulate, because every month you just keep on buying all these assets. All right. So for the long-term trading strategies, for the long-term investing, you just keep on buying all those good stocks. I mean, good quality stocks, stable stock. Like gold, maybe for cryptocurrency, people can go into Bitcoin, because when Bitcoin is dead, everything is dead, right? But we must prepare that we still need to keep on buying even though the market is crash, because crash can happen anytime. We don't know. Or huge correction. I wouldn't say crash, just huge correction. But from historically, when it drops a lot, it means the market is on a huge discount. So you have to keep on buying. For long term, don't be scared. Just keep on buying. Just have belief with all these blue chips or good ETF. Just as simple as ABC. All you need is discipline and the belief about the markets will go up. Then you dollar cost averaging, you are not all in. So you won't be so stressful. All your capital is allocated in the stock markets. Right. Okay, so this is Nasdaq. During the COVID, it drops about 38%. However, now it still makes a new high. So even though you bought at the high of the before the COVID, if you because you are not all in, you keep on dollar cost averaging, maybe 2 to 3 years. Eventually, now every position you bought in is making money. However, if you keep on trade in and out, eventually you lose all your money. After so long, you look back, the stable, you will just want to earn the money. So you have to find out which one have the highest win rate. I would say for a newbie, dollar cost averaging is only strategies you need for long-term strategy, and those who doesn't have any times to look at the markets. Sometimes for the more you look at the market, you stare at the markets, you lose more. You have to experience yourself, unless you have a very good skills, very skillful in technical analysis of the stock. Okay, next, like DCA, the cost averaging, what we can do. Sometimes many people say, oh, now it might be very high. So what can we do? So if you feel the market is very high now, so you can consider to use flexible dollar cost averaging. For the fixed one is you just buy every month or every week. It depends on you. Like maybe you want to buy $100 per month, then you just keep on buying regard of the up and downs of the share price. However, if you feel the market is very high now, you can just maybe buy. Let's say you want to invest $100 every month. You can just maybe buy $50 every month first. Then when it drops like maybe 5% to 10%, you can scale up to maybe $70 or $60 every month. And then when it drop another 10% or 3% or 5%, it depends on you. You just scale in another. You will start to invest $80 every month, and yeah, and then repeat it. So it really depends on your strategies. But for me, dollar cost averaging, you just go by every month. You can use uSMART. uSMART got these functions. You just pick it and then you invest every month. It's just as simple as that. Remember, only good quality stocks, good blue chips of the sector. And then don't invest in those cyclical sector like commodities. Gold, I think gold is still okay. Don't go in like oil, maybe healthcare. I think healthcare is relatively stable, doesn't have a good capital appreciation. You all still can go it. It depends on your risk and understanding. This is just my preference. So I just want to share about dollar cost averaging is the only way and the most easiest way for you to earn in the markets. You just treat it, the stock price, the stocks as assets, not liability. You want to accumulate good stocks a lot, so you rate it discount a lot, then you buy a lot more. It's just simple as that. And then this is the cycles, and the last one, this is the cycle of the markets. So you all can think that where is our positions right now, right? So we are definitely not like for Nvidia or Tesla. We are definitely above those media attention, enthusiasm, or maybe greed. I'm not sure which one when's the top, but we are not in the smart money and institutional investor stage already. We are not in the stealth phase and the awareness phase already. So the longer the times it went up, actually the risk of like going down is getting higher. But sometimes the bull can go forever, right? Who knows? We can't time the market. So the best way to do is like dollar cost averaging while waiting. If there is a big crash or big corrections, then we can maybe allocate more to buy more good stocks at bottom, because we never know. It's not that easy to time the markets. I think many people do short-term trading because it tries to time the market. In fact, they will get burnt. It's not that trading is not good. but it really requires, and it's not like newbies friendly, I would say. You all still can like go explore into this short-term trading because there are people like short traders that earns a lot of money. Here I just want to share, like, if you want like easiest way to earn money in the markets, you just do long-term trading strategies. All right, so this is what I share with y'all, and today's I will talk about like the short-term tradings and long-term investing. I hope y'all benefits from my sharing sessions, and yeah, that's for it today. If you all feel good, maybe if you all got any questions, maybe you all can leave down now, and yeah, maybe I would appreciate if you all so this my WeCom. WeCom actually is you can use WeChat for those who have WeChats to add. Can add my WeCom, and then there's Telegram groups, and yeah, we just create those these Telegram groups, and maybe you all can consider to join. If you got any questions about uSMART, maybe you all can approach me inside the Telegram groups. So I hope you all learned something today. So for me, in conclusions, the mindset is very important, that you want to do a short-term trading or long-term investing. All this you have to decide yourself. So yeah, just plan the trade and follow the trades, and may market be with you all. Yeah, a very good sessions, very informative with live. I already do. Yeah, if you keep on save money, what we can do is actually you just work and like keep on save the money. Eventually the market will drop. We have a huge corrections anytime. Then by that time you just started. Then it slowly just maybe DCA, because when the market drops a lot, like if there is a huge downtrend appears, it will take some long time to recover. So you can, by the time you got the money to slowly DCA into the good stocks. Yeah, this is the cycle. It will keep on happen, but we don't know when is the up and the down. It definitely will happen, but we don't know how long. So if you want to miss it, you just keep on DCA the markets. And thanks for supporting these sharing sessions. I hope all of you all learn something. And yeah, actually this is just for newbie, just for those who just join the markets. I think many people who experience the markets already know what to do. So I hope I can my sharing can benefit most of you all. And yeah, may the markets be with you all. Hopefully Trump don't do anything stupid. All right, so yeah, just add the telegrams and see you there. Have a nice day, everyone. Okay. Okay, thank you, Richard. Bye. Bye.